All right, boys, this is a crash course on stocks for your future, to invest, to be wealthy, and to steal from the rich, because that's all this is. All right, basically, what the stock market is a representation about how the American economy is doing. When the stock market is doing good, the American economy is doing good. And that's what we like. We like when businesses are blooming, when more jobs are being offered, when companies are making money, and we, the common people, can take money from the companies by investing in the stock market. It's really simple, and I'm going to teach you how it goes. All right. Basically, stocks are you invest in what's called a share. And one share is one portion, one piece of the puzzle of the entire company of ownership. So if you have one share in Microsoft, you own a piece of Microsoft. That's cool, isn't it? But anyway, usually when they initially launch a stock, it's called an IPO. And what that does is that releases a finite amount of shares to the public, and the public purchase them at an IPO price, which is the initial cost of one share of the stock. And what happens is when people buy it, the stock price goes up. And when people sell it, the stock price goes down. Just like any other thing. Scarcity equals profit, right? So when something's scarce, you make money on it. So let's say you decide to invest in Amazon, right? Now, Amazon, one share of Amazon is, let's say, $200. This is just an analogy. This isn't serious, right? So let's say Amazon is $200 a share. And this is right at the beginning of the day. Oh, let me just mention, the stock market works in like a time zone. So it usually starts, well, it does start at 9 a.m. and ends at 4 p.m. So that's the only time you can trade. That's the only time you can make money in the stock market, is within that margin of time. And it's only Monday through Friday. The weekends, there's no trading in the weekends. So Amazon at 9 o'clock in the morning, when the day starts, when the trading starts, is at $200. You decide you don't really want to invest $200 yet. You just want to see how the company's going to do. So let's say you put $50. No, let's do $100. You put $100 in. So you put $100 into Amazon, and this red line is $200. This red line is where the cost of one share starts. So that's what this red line means. Can you see that? Yeah, you can see it. You're good. All right. So $200. You invest here. Let me get another marker. You invest in Amazon at $200. Put a star here because you invested there. Right? Can you see the star? Yeah, you're good. All right. So let's say you invested $100, right? So we're going to write that down. 100 Amazon. So you invested $100 in Amazon at the beginning of the day at 9 a.m. Now, at 2 p.m., you check back at it, and the stock is steadily going up at a really alarming rate, and you're making a lot of money. The stock price went from 200 to 250. Let's say that. So that is a 25% increase, roughly. So now Amazon is no longer at 200. Amazon is now at 250. And in your $100, since it increased 25%, what's 25% of 100? 25% of 100 is 25. So your $100 that you put in at 9 a.m. just turned in to 125. Now, you don't want to sell it yet, right? Because that's still early in the day. There's still 2 hours of trading left. You want to see how it goes. And it's a good thing you did, because Amazon just went up a lot more. Amazon just went up to, instead of $2.50 a share, which it was at 2 p.m., Amazon went up to $300 a share. And that's a 50% increase. That is astronomically huge. That's really rare to happen, but this is just for the analogy. We're going to say it had a 50% increase. So Amazon went from the beginning of the day at 200 to 300 at the end of the day. And at 358, say, you check back and Amazon is at $300 a share and it says a 50% increase. And you're like, oh man, look at this. That's great. I just made $50 in one day off of one stock because I just put $100 in. So your $100 that you initially put in just turned into $150, right? So your $100 that you put in turned into $150 at the end of the day, just because Amazon stock increased by 50%, right? So, and you decide at the end of the day, you decide, hey, I'm going to take this and I'm going to sell it and I'm going to secure my money, as you always should. But if you're investing long terms, I wouldn't recommend doing this. I'd recommend finding a company, doing research, and investing in a company that has promising signs of going up in the near future. Let's say a year to 2 years. So a year to 2 years passes, and here, let me, I'm getting a little ahead of myself. So you made $150 on Amazon that day. What you just did, you just day traded. Day trading is when you trade in the same day. But usually you pick stocks that have curves going back a year or a month or so, that show the stock going up, down, up, down, up, down, in a zigzag pattern like this. Just like this. See this squiggly line here? And you lucky son of a gun, just bought Amazon at its low point right there, right? And you sold it at its high point. That's what you just did. You just day traded Amazon and made $50. That's all you did. That's day trading. But day trading is really risky, and sometimes stockbroking companies don't like when you do it. So don't do it often, but if you see an opportunity, snatch it up. You might as well. So let's get back to future investments now. Future investments, let's say, what's a company? I don't know. Coca-Cola. Coke, right? Coke. Right now, Coca-Cola is at $2 a share. We'll say $1 a share because the math is easier that way, right? So right now, Coca-Cola is at this dotted line. That's when it started the day. Coca-Cola, $1. So you invest in Coke, you put $1,000 in Coca-Cola. You put $1,000, right? In Coca-Cola, when one share of it is worth $1. So you just bought yourself 1,000 shares, right? Now this is where it starts to get really good because you're about to make a lot of money. Because Coca-Cola, in 2 months' time, is worth now $4 a share. So time goes by, steadily increases, and now it's at $4 a share. It's right there. And you're like, hey, now that it's at $4 a share, I just turned my $1,000 into $4,000 just by that, because it was a 400% increase. By doing that, not only are you investing in the future, but you're investing your money, and you're making your money is making money for you. You're having other people turn your money into a bigger amount. That's all you're doing. So when you do this, you got to pick the right companies. You got to do your research. Now is a really good time to invest. You know why? What's going on right now? The coronavirus, right? All of these companies, the stock market is struggling right now. It's so low right now, but that's what we like. Because when it's super low like this, the stock market, everything's so cheap. And if you look at the curves from the past, this is what the curve looked like. For, let's say, FedEx, right? Now, FedEx is a bad example. FedEx is killing it right now. Let's say AMC movie theater. AMC, Alexa, be quiet. My bad. Okay, so see this graph? We got AMC. AMC at the beginning of the year, it was way up here. Then something called Corona happened. Corona dropped the stock astronomically. It took a dip down dive right to the bottom. And it went from $20 a share to $10 a share. It dropped 50%, which is huge and horrible for this company. But it has stayed there stagnant because they can't make any business because nobody's going to the movie theaters right now. But what's going to happen when the movie theaters open back up? This stock is going to shoot up again. And if you look at the curves, it's already written in proof. Because when the George Floyd thing happened and everybody kind of forgot about coronavirus and everybody started putting money back into their stocks, what did it do? It shot up again, right in the middle. Right in the middle, right there. You see it? So that's proof that your money's secured. So you invest right now in AMC. AMC's 10 bucks a share, let's say, right now, and it was at $20 a share at its height. So you invest right now, you turn your $10 into God knows what, because it's gonna soar, because people are sick of being tired, sick of being cooped up in their house. They're gonna go around and they're gonna go to movie theaters, right? Let's say that, why not? They're gonna go wanna see movies, they're gonna go wanna entertain themselves. They haven't been able to do it for 4 months, right? So this stock, even though it was at $20 a share at the beginning of the year, it may even go higher because they're getting such good business because everybody's doing it now, right? So you could possibly have over 100% increase on this if you play your cards right and you pick the right companies. Entertainment companies are a great one to invest in right now. Flight companies are a great one to invest in right now. Don't invest in Boeing. That was an L for me. But it's okay, I made my money back. But basically, yeah, you invest when they're low and sell when it's high. That's all you're doing. And you're taking money from the rich and giving it to us. That's what we want, right? All this is, it's a math problem in your head that you got. It's statistics. If you take the statistics and you do the research and you see this graphs from the past, like we just did with AMC, you see the graphs from the past and you see that your money is guaranteed to go back up again, you can make a lot of money. You can multiply your money and have it for future investments. The more money you put into the stock market, the more money you make and the more money you can lose. It's subjective. It's risky at times if you don't play your cards right, but if you play your cards right, you're fine, you know? So let's say you put $1,000 into AMC at its lowest right here, at $10 a share, and it rose up to $50 a share. That's a really big increase. That's over 100% increase. That's 150% increase actually. So you turned your $1,000 into $2,500. I think. Yeah, my math is right. All right. But anyway, yeah, that's all it is. It's a math problem that you can heavily influence by just using your brain. And if you use your brain, you're going to make money. You're bound to. Getting invested at the stock market at a young age is great because all you're doing is you're putting your money back into the market that you made from your other stocks, and you're making more money. So why not do it, right?